Hi, it's Mitch from Reverse Mortgage Pros. In this video, I want to discuss breaking a reverse mortgage by either switching lender, refinancing it, or paying it off. Let's get started. If you're new to my channel, I provide free professional help with your reverse mortgage decision. I have dozens of videos and articles on everything to do with reverse mortgages like this one. Hit the subscribe button and the like button below this video to get other videos like this and help decide if reverse mortgages are right for you and what you should do with a reverse mortgage. Now, for anyone who already has a reverse mortgage, is considering getting one and would like to plan for future contingencies, I'm going to explore the subject of breaking a reverse mortgage in this video. It's going to be focused on the three ways you can intentionally break a reverse mortgage yourself, which is moving it to another lender, which is commonly called switching, refinancing it, or paying it off. And I'll discuss what those mean in more detail in the video. For when a reverse mortgage naturally comes to an end, when the owners pass away, you can already watch my video called What Happens When a Reverse Mortgage Ends, which discusses that in a bit more detail. This is more the intentional manual breaking of the reverse mortgage that I want to discuss in this video and what your options are and what it means. Before I get into details, as I do at the start of every video, I'm going to walk you through what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any repayment. You can get 10 to 55% of the home's value depending on age, property, and location. You can take as much money as you qualify for, but any existing mortgage must be paid off first using the funds. It's designed to help you tap into your home equity for retirement to continue to live in your home forever. Now in this video, as I mentioned, I'm going to discuss the steps to break a reverse mortgage by either switching lender, refinancing, or paying it off. And those are the three ways to break a reverse mortgage. So first there's paying it off, which is fairly self-explanatory. There's moving it to another lender, which is commonly called switching in the mortgage industry. So for example, you might get a better rate and you might want to move your reverse mortgage to a lender. I'm going to discuss that and when you're able to do that. You can also refinance it. And the difference between this and switching is that a refinance is where you take out more money and it can be with your current lender. You can actually refinance with your current lender or a new lender. I'm going to discuss what that means with regards to reverse mortgages because there's a few kind of different things as to how they work. So the other question that you might have is why would you break a reverse mortgage? So there could be several reasons. You might be wanting to get more money. There might be better rates available with other lenders. You might no longer need the money and want to just pay it back. Or you might be selling your home and you no longer need your home, in which case you're paying it off after you sell your home. So the most simple way to break the reverse mortgage is paying the reverse mortgage off. It can be done at any time you like. You're going to need to pay off the amount borrowed plus any interest that has been added to that amount because the interest is added to reverse mortgage because you don't have monthly payments. Paying it up early is subject to penalties. I have a whole other video on penalties too that you can look on my YouTube channel. I'm going to discuss them a little bit further into this video too because they apply to all three scenarios. Generally speaking, when it comes to penalties, it's not a good idea to repay a reverse mortgage in the first 3 years. The penalties are at their highest. Again, I'm going to discuss that further in this video because penalties apply to all three ways of breaking a reverse mortgage. But paying in full is actually very simple. I'm not going to spend too much time on it. It's not a super common way of breaking a reverse mortgage. Now, the more common ways that people are thinking about are refinancing or switching a reverse mortgage. And these are the other two that I mentioned, but I'm actually going to group them together because when it comes to reverse mortgage, switching to another lender and refinancing are essentially the same thing. With a regular mortgage, you could switch to another lender and not have to go through a full application process, and you'll get better rates even usually today in that scenario. That isn't possible with reverse mortgage. Reverse mortgage, when you switch to a new lender, it's exactly the same process as refinancing. Doesn't change the rate, doesn't change the fees. Whereas a regular mortgage, if you switch to another lender versus refinance, it actually does change the rate, the fees, the setup, and everything. So what this does mean is when you switch, you can decide to take more money and turn that switch into a refinance if you like, and it doesn't change anything at all. So for the rest of this video, I'm just going to talk about switching refinancing in the same light because when it comes to reverse mortgage, they are the same. Now, a common question from people watching this video might be, but I signed up for a 5-year term. Am I not stuck until the end of my term? Well, terms do not work the same way for reverse mortgages as they do with regular mortgages. So the answer is no, you're not stuck. With a regular mortgage, the term sets the rate that you'll pay for those 5 years and the penalty amount, because the penalty amount is linked to the amount of time remaining in your term. So if you have a 5 year term, at the end of the 5 years, you could switch or pay that off with no penalty. And generally speaking, the further into your term you are, the lower the penalty is going to be, and the earlier in the term you are, the higher the penalty is going to be. That's with a regular mortgage. A reverse mortgage, terms only set the rate, the interest rate, and the length of time you're paying that set interest rate. The term has absolutely no impact on the penalties at all and your ability to refinance or switch your reverse mortgage. And the easy way to explain that is just with some simple examples. So if you took out a 1 year term, the penalty to break the reverse mortgage at the end of 1 year is exactly the same as if you were on a 5 year term. There's absolutely no difference. The terms don't matter in that situation. If you took out a 3 year term, the penalty to break the reverse mortgage at the end of 3 years is exactly the same as if you're on a 5 year term. Again, the terms don't matter. The term has absolutely no influence on the penalty at all when it comes to a reverse mortgage. So while the term you took out has no influence on the penalties, there are still penalties payable. And so the question is, when is the best time to switch or refinance your reverse mortgage? The best time is actually after 3 years, but 4 years. Funnily enough, there's a little window there between the end of 3 years and the start of 4 years where the penalty is going to be the lowest. The penalties, as I mentioned earlier, are highest in the first 3 years that you hold a reverse mortgage. Again, remember, term doesn't matter. It's all about how long you've held a reverse mortgage. After the third year, the penalties drop. They get to their lowest point after 3 years have passed, and then they actually gradually go up every single year after that. I'm going to give you an example and show you some numbers to explain how that works. There are some exceptions before I get to the example calculations. So after 10 years, there's no penalties payable, so you're free to switch different lender or refinance at that time without any penalty. With some of the lenders, there's a short window at the end of 5 years where you can pay off a reverse mortgage with no penalty. Talk to your lender or shoot me an email to ask if they're one of the ones that offer this. And I've also covered in the other video what happens if reverse mortgage ends when the subject of homeowners passing away. There's no penalty when that happens. And if you move to a retirement home, there's no penalty when that. So there's a 50% reduction in the penalty when that happens. So here's a simple example for you. So let's say you've taken out a reverse mortgage for $300,000. When can you refinance or switch it, and what penalties would be payable? And notice I'm not even going to mention what term this or rate this reverse mortgage is for, because it actually doesn't matter at all. It's worth noting that the different lenders do have different penalties. I'm going to use the biggest lender in Canada as of the time of this video, but the principle and everything I'm talking about applies to all of the current reverse mortgage lenders. So here's what the penalties would look like roughly on a $300,000 reverse mortgage. I'm going to draw your attention to a few numbers in particular. So after the first year, if you look where my mouse cursor is, the penalty is $16,000. That's when it's the highest. After 3 years, the penalty is $6,500. That's when it's the lowest. And then by year 10, so after 9 years, before you get your zero penalty after 10 years, it's back up to 9,600. It actually goes up after 3 years have passed. When it hits its lowest point, it goes up again. And this is using current interest rates for calculations. The interest rate does impact the calculation for this, but not the term. And as I mentioned, the term doesn't matter at all calculating these penalties, but interest rate is a factor as to what the penalties are. So they might change depending on what rate you got in your reverse mortgage. The best way to illustrate this is a simple chart. So this is what the penalties look like on a $300,000 reverse mortgage. And again, you can see basically between year 3 and year 4, that's when your lowest penalty payable is going to be. And in the first 3 years, the penalties are the highest, and then it gradually ticks up over time until between year 9 and 10, at which point the penalty is actually the fourth highest. So year 1 is the highest, year 2 is the second highest, year 3 is the third highest, and then actually in year 9, before your end of 10-year term and you get your zero penalty starts, is the fourth highest penalty that you'll pay. So this is an important principle because it's not how regular mortgages work, and it's quite surprising. A lot of people don't understand this, and even I was actually quite surprised when I discovered this myself. So there are some other costs and considerations when it comes to refinancing or switching and weighing up the decision. You're going to need to look at what the new interest rate will be, what savings you're going to get in that. Generally speaking, you would want to be saving on the interest rate to refinance or renew. How much additional money you can get if that's something that you're looking for, if you're refinancing or renewing to different, that'd be specifically refinancing to a different lender, and then what costs and fees apply to setting up with a new lender, because you will have to pay some costs and fees again that you may have paid the first time round. And so what I thought I'd do is I create some rules of thumb for you on how much you need to save on the interest rate for different balances to pay for the costs of refinancing and switching. This doesn't include penalties though, because I don't know what your penalty is going to be. I can't really include penalties in this, so you will need to factor those in too, and I'll talk about that in a second. So if you had $100,000 reverse mortgage, you only need a rate that's roughly 0.6% lower than what your current lender is offering or asking to make it worthwhile switching to a different lender. If you have a $200,000 reverse mortgage, you need a rate that's roughly 0.3% lower to pay for the costs and fees of switching. If you have a 300,000 reverse mortgage, you only need a rate that's 0.2% lower to pay for the costs and fees of switching. And 400,000 is 0.15. 500,000 to a million is roughly 0.1. And if you have a reverse mortgage over $1 million, you actually only need 0.05% lower rates to pay for the costs and fees of switching. Because once you get over $1 million, the costs and fees are not material at all. They're tiny compared to the amount that you're actually paying in interest. So interest rates rule the bigger the reverse mortgage. And so a general rule of thumb here would be the bigger reverse mortgages, the smaller the rate savings you need to make it worth your time switching. So at the end of the day, your question might be, should I switch or refinance my reverse mortgage? So with the penalties included, you'll need slightly higher rates than the ones I just showed. So the rates I just showed, so for example, you only need to save 0.3% on a $200,000 reverse mortgage to make it worth your time switching. It might be 0.4% once you factor in penalties, 0.5%. The penalties are going to differ, so it can't really give you a general number there. However, one of the lenders right now is running a promotion that effectively makes switching or refinancing free. They're essentially paying for all the costs and possibly even some of your penalty costs too. So even a 0.1% better rate might make it worth switching. So you also need to factor in lender promotions and offers and consider those, as well as the fact that these promotions might not exist forever. So it might be good to take the chance to jump on them while they do exist, in making your decision if you should switch or refinance a reverse mortgage. So, in summary, breaking a reverse mortgage by either moving it to a new lender or paying it off is an option available to you, to anybody, regardless of what term you're on and when you are, what point in your term you are. Term doesn't matter at all. Penalties are payable, they're not linked to the term, but rather how long you've had the reverse mortgage. Penalties are highest in the first 3 years. They're lowest in year 3 to 4 after 3 years have passed, but then they gradually increase after this up until year 10, at which point they are zero. In making the decision, you're going to need to weigh the costs, the savings on interest, and any lender promotions, which may be short term and may not last forever, to decide if it's worth your while. Now, if you're not sure and you're thinking about this, I'm going to give you two options here. So I offer a free professional reverse mortgage assessment. I can advise you if a reverse mortgage is a good solution or switching is a good solution. So if you're an existing reverse mortgage holder and you're considering switching your reverse mortgage, you can go to reversemortgagepros.ca/switch and put your information in there, and I'll take a look and run the numbers for you and advise you if it's worthwhile for you to switch your reverse mortgage. Or if you don't have a reverse mortgage and you're watching this just for interest and you're interested in getting some advice if a reverse mortgage is right for you, you can go to reversemortgagepros.ca/assessment. So existing reverse mortgage holders, go to reversemortgagepros.ca/switch to see if it's worth switching your reverse mortgage. Or If you're just looking for a free assessment to decide and see if a reverse mortgage is right for you, go to reversemortgagepros.ca/assessment. Otherwise, if you have any questions or comments, you can leave them in the comment section below this video, and I'll answer every single comment and question as I do on all my videos. Otherwise, I know this was quite a dense video with a lot of numbers, a lot of information, so make sure and rewatch it if you want to. But otherwise, I hope you found it useful and it helped guide you when it comes to deciding a reverse mortgage, or for existing reverse mortgage holders, whether you should stay with your existing lender or move or switch to a different lender. All the best.